I think maybe the biggest surprise was that we were actually as high as we were. Good afternoon, everyone, and welcome back to the CommStock channel. I am Relph with CommStock Investments. We're going to do a little something different today. Take a brief look at how things finished up for the week and then go into the details of the two major cattle reports that were released at 2 p.m. today. Starting first with the finishes for the week, and going to start here with the grain markets. December corn finished the day down a penny and three-quarter at 4.19. December corn futures finished the day down a penny and three-quarter at 4.19. November soybeans off 3.25 at 10.21. Both were down for the week, but we didn't see any huge downside breakouts, nothing to do any real chart damage. The beans maybe a little more so than the corn, as we were setting up for kind of a bull flag formation that got negated between yesterday and today's trade. So that's somewhat noteworthy, but all in all, nothing big there. The wheat had a terrible week this week, just couldn't get any legs underneath of it and kind of put pressure on the corn in the process. Finished the day today down 2 to 3 cents depending on class and contract. Some big movers today were in the metals markets. We had gold off another $30 today after having a rough week so far, 3 days down to end the week and running in that $25 to $30 each of those days. September silver off 86 cents currently, finished the day right around that level after trading over $1 lower earlier in the session. Of course, this week with the reports that came out this afternoon, all eyes were on the cattle market, and we had some big trade going on. Finished the week near the top end of the ranges. You look at the August feeder cattle contract, high was actually made on Wednesday at 332.07. We closed today at 331.37. So very close there, and definitely the top end of the range near the contract high. Inarguably strong market, and the cash is remaining strong as well, as we've seen the real-time index as well as the CME cash feeder cattle index gaining ground throughout the week. You get a little bit of ebb and flow, but all in all, it's been a very strong market and has been for quite some time. That's been one of the shining spots in the entire cattle complex. August live cattle finished Friday up 67 cents, closing for the week at 226.47. Again, very near contract highs after making new highs on Wednesday at 227.40. The target right now is likely going to be on the continuation chart for the live cattle. The June made a high at 229.12. If we can target that area, you may run into some hedge pressure. Of course, as we look at the numbers from these reports, that may not be the case either. We'll have to see how the traders treat this data. I'm going to start first with the inventory report because there weren't any huge surprises there. I think maybe the biggest surprise was that we were actually as high as we were on these inventory levels. The average trade estimate for all cattle and calves for July 1st as a percentage of 2 years ago, because you have to remember last year we didn't have this mid-year report. So the average trade guess was 98.1%. We came in at 99%. It was a bit of a surprise to me to see that high a number. As we look at the market ready supplies and how hard the packers have been having to work to get some of these cattle, I was a little bit surprised to see that 99%. However, when you flip over and look at the cattle on feed report, there were some big bullish surprises here that could offset some of the maybe negativity from the inventory report. On feed for July 1st, 98% of a year ago, expected to be at 99.1. The big and major bullish number was the placement number for the month of June, came in at 92%. Expectations were for 98.1%. That number alone should negate any negativity that we may have experienced due to the inventory report, but you never quite know how the trade's going to treat it and how much of this was already priced in. Marketed 96, right in line with expectations, so no big surprise there. Of course, now the big question is, how is the market going to treat this moving into next week? And of course, no one knows. My best guess is that this low of placement number in the month of June probably is bullish enough to offset any other potential negativity that came from any of these numbers, as has been the case throughout this cattle rally, going all the way back to COVID, really, when we made our meaningful low there and then started the uptrend. Any news, whether negative or positive, was met with a stronger market. And it may be that you saw some negative news that ripped the market down for a day or two, or even for half a session or something. And then you just rally back, resume the uptrend, make new contract highs. That has been the case over and over and over throughout this cattle market. So maybe there's something that trips a trigger to the downside to start things out for the week, but I wouldn't even expect that with a 92% placement number when we were expecting 98. However, we are at awfully lofty levels, and I think the cash trade as we finish up the week here, which has been very muted. The packers have not been out aggressively buying cattle, and the cattle that have been bought have been at steady money for the most part with last week's trade. If they do get aggressive here after the 2 o'clock reporting deadline, after these data sets have come out, And maybe they do the same thing that they did last week and keep buying all the way into Saturday at higher prices. If that's their expectation for a higher market next week, they may be able to get some procurement done that would boost the weighted average for the week and actually give us some additional bullishness to stand on to start next week. All remains to be seen. Haven't heard any confirmed cash since the report came out 45 minutes ago. Hopefully we'll see some kind of signs of life in that market, as like I said, it has just been very lethargic throughout the week this week. I did hear right before I came in here to record today that there were bids surfaced at 240 to 242 in the north. That would be steady with the top end of last week and probably boost the weighted average a little bit in the north if that's realized. Feeders asking 232 in the south, bids floating around at 230 and 231, so they'll likely get some deals done there as well. Looking for those numbers to get bolstered off of these report figures, maybe a fool's errand, but I wouldn't be surprised to see something like that occur as we go into the weekend here as well. So thank you for joining me on this episode of the CommStock channel. For executive producer Brianne Jenkins, I'm Eric Relph with CommStock Investments. We'll see you next time.
Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.